Are you a doctor, dentist, or other high-income professional tired of trading time for money and looking for a way to build real, lasting wealth in 2025? Well, in this video, I'm going to break down the strategies that you see behind me. They're going to help you to achieve financial freedom and create passive income, which is totally opposite of what the financial advisors tell us, right? So it's time to stop relying on your job and start building wealth that works for you. Now, if you're new here, I've got a free training. You can get the link below this video. It's all about real estate, passive income. All you got to do is put your information in, grab it. It's free. Do it now. All right, let's get into it. Number one, let's talk about why the traditional financial advice that's giving to us, why it's actually failed to us. All right, think about it. Think about the financial advice, not only the financial advisors give you, but what the typical, quote, financial gurus give us. Dave Ramsey, Susie Orman, your financial advisors, people like that. What are they typically telling us to invest in? 401k, right? Now, I'm not anti-401k. I have a retirement plan for my practice, for my employees, but they're saying that is typically the only way that you can be guaranteed to retire as a millionaire. And what are in those 401ks? Stocks, bonds, mutual funds, ETFs, things like that. Think about the 401k, the retirement plans. When can you touch that money? Not till you're like 60. Well, what if you're in your 30s or 40s or 50s? Well, if you follow the common advice, then you can't touch them. You're trapped, right? There's nothing else that you can do. So why does this fail? These strategies that we're giving to us, they rely heavily on long-term, slow-growing investments, right? They keep us, doesn't matter if we make a lot of money or not, they keep us stuck trading time for money. We have to always, in the back of our mind, is, do we have enough to retire? Am I gonna have enough saved up? What if the stock market's down next year and I wanna retire? This whole advice that we're giving, it keeps us in the rat race. And we have very, very little control over our financial future because again, our retirement is tied to our jobs and this is the only thing that we know. Number two, we've had to focus on shifting from, I got that wrong. Let's change that. Well, hopefully you saw that I had that wrong. So we want to shift from what we have right now, our active income, right? This could be W-2, 1099 income, shift from active income to what? Passive income. Most of us don't think about that. We're not taught that in school. If you start off and you're working, you're practicing or whatever, and let's say you start off at 30, and then when you get to the point, let's say you get to 65, most people, if they do retire at 65 or whenever they retire, they look back their whole career and they have that one active stream of income. That's it. They're relying on that one income year after year after year. That's a lot to rely on, right? Instead of having other income streams, having multiple income streams coming in, and we're not solely tied to a job. So active income, your active income, it requires ongoing work, like a job, a medical practice. You have to go, right? If you don't show up, you don't get paid. Versus passive income from real estate syndications, owning businesses, dividend paying stocks, things like that. These streams of income continue coming in even when you're not working. My favorite is real estate syndications. I have multiple videos on it. You can go through my YouTube channel, check it out. Specifically RV parks and mobile home parks. Number three, investing in 2025, I really want you to focus on just one. You have 12 months just to take one and invest in one cash flowing asset. Well, why does this matter? Because the cash flowing assets, that's what's going to generate the steady income. That's what's going to give you the passive income. That's going to allow wealth to grow without you being actively involved. I want you to study about assets and liabilities, okay? Remember, we talked about this in other videos. Assets put money in your pocket. Liabilities take money out of your pocket. An easy way to remember this is assets feed you, liabilities bleed you. Assets put money in your pocket, again, like real estate, businesses, things like that. Liabilities take money out of your pocket. Debt tied to your credit card debt tied to boats, SUVs, things like that. So I want you to, let's very quickly, let me show you this diagram. So here's the typical cash flow from the book Rich Dad Poor Dad. Here is the cash flow pattern of your typical high income earning professional like a doctor. I'll put it right here. So you have, here's your job. That's your job right there. You've got income, you have expenses, you have assets. Remember that put money in your pocket, and you have liabilities that take money out of your pocket. So let's say you're a dentist. You go to work, you make the income. We spend our whole careers acquiring liabilities that we think are assets. Our house. Does your house put money in your pocket or not? Unless you rent it out, it doesn't. Your house is a liability. Boats, SUVs, when you take vacations, private school, all those things. All those liabilities kick off expenses. This is the cash flow pattern of the typical doctor, typical high income professional. Again, what happens if that one income goes out? What happens if you get hurt? What happens if you have another pandemic and you can't practice? How are you going to pay these expenses? So instead, nothing wrong with your job. That's your biggest wealth building tool. It's your career. You're going to make the money, but instead of spending all this money on liabilities, start acquiring assets. What do the assets do? Remember, assets give off this. Assets give off passive income. So the assets give off the income. In turn, you've got your assets giving income. The income is now paying for your liability. Doesn't matter if you go to your job or not, because that's not what's producing income. Your assets are. Okay, I want you to get to the point, make 2025 the starting point to where you start at minimum, your New Year's resolution, at minimum, one stream of passive income this year. You have 12 months to do it, okay? Number 4, tax strategies to increase your wealth. There's tons and tons of tax strategy out there that the wealthy use to dramatically reduce their liabilities out there, mitigate their taxes to grow their wealth faster. I want you to look at your income, and I want you to look at what you're paying in taxes. It's crippling, okay? Oh, here, do this. I want you to, last year, I want you to get that figure or write it down, what you paid in taxes, okay? You have that figure, have it in your head. Okay, now I want you to say, what if you only had to pay half of that? Or what if you only had to pay 25% of that, or none of that? What would that do to your life? Okay, what would that do to you? It would free you up. You could take that money, and again, you could probably take that money and purchase your first cash flowing asset, right? Things like depreciation in real estate. It's so powerful because in real estate, you're adding passive income streams that if you do it right, that wipes out the taxes you pay on it. So the financial advisors tell us we need 10, 12, 15, $20 million. You don't need near that much, because the income that I'm recommending that you start to acquire has little to no taxes. If you don't have a tax strategist, I'll put a link below this video of who I use, but that's key. So literally the end of each year. So if you file an extension, like in, let's see, was it the middle of October? So in November and December, you should be talking to your CPA, to your tax strategist about next year. This is the time to do it, okay? There's all kinds of ways to mitigate tax strategies. I cannot stress this enough to you, okay? Number 5, I want you to start getting a mindset to where you're not focused on retirement anymore. You're not focused on that. I want you to be focused on financial freedom now. You can retire whenever you want. I want you to get to the point where work is optional. Okay, again, what we talked about up here, the traditional financial advice. Traditional retirement means saving for decades and decades and decades. Okay, it's always off in the distance. Kind of like the people, you see the cartoons, the guys out in the desert, it's hot, he's trying to get water, and it's like a mirage. As he gets closer to that palm tree and that water, it keeps moving. I can't tell you how many people that have gotten to the point where they want to retire and they just keep pushing it back. It's always excuse. My financial advisor told me I need to work another 2 years. I don't have quite enough saved up. Stock market was down this year. I don't want that for anybody, okay? But if this is the path that you're on, if you don't do something about it now, that's what's gonna happen, okay? Again, traditional retirement means saving for decades, but financial freedom, if you focus on that, means you have enough passive income to cover your expenses, making work optional much sooner than what they tell you. So the goal is to create a life where you choose when to work. You get to go to work, not you have to go to work. You go because you want to, all right? Number 6, scaling your wealth. So there's many tools and systems out there that you can automate and scale your investments. Some people are better at handling money than others. You know better than I how you are. If you're the type of person that has to have somebody hold money back, or you just can't remember to do it, there's plenty of tools out there to automate it. You can go into your bank or your financial, if you have Fidelity, Vanguard, anything like that, and you can set it up to where money comes out of your account on a weekly, daily, monthly, whatever you want, bi-monthly basis to another account. You can move stuff around. So if your goal is to save, let's say $100,000 this year to get your first cash flowing asset, well, then you can set it to where there's an account. Let's say it's a financial freedom account, and you can automate it every time you get paid or once a month, whatever money's going into that account, whatever you want to do. But there's ways out there to automate it. That's my whole point. You don't have to rely on people to manage your money unless you want to. You know what's best for you, and you are going to be the only type of person out there that's really honed in, that's really your money. It's the most important to you. Nobody else cares more about your money than you. And then you can actually start to leverage, you can actually outsource this if you have a team, or if you have an investment advisor, or you have other people. Talk to wealthy people. Who do they use? You know, they probably have like a little small team, okay? You can outsource these sort of things as well. You can reduce your time commitment. You get people to outsource it to, so you can still grow your wealth. All right, and last but not least, all of this information on YouTube, it's great. You know, most people just go through it and then they just go and move on to the next thing. But what's the point of you're watching this video for a reason, okay? You want to build wealth this year, okay? You know you want to build wealth. You've watched this video almost to the end. Now you have a choice. You can just move on to the next video, which is what probably 99% of the people are going to do, or you can push pause. You can review what we've talked about, and you can actually start to take steps today. Your habits are going to shape your future, right? Your habits are going to shape your future. If you look at a dude and he's jacked up and he's muscular, well, he's got habits. He probably wakes up early. He probably eats right. He probably goes to the gym, train. That is his habit. He does it day in and day out. He doesn't just wake up one day and he looks like that. So if you want to build wealth, you have to get into habits that are going to get you there. Again, make it a point. Write down your goals. Let's just make it a point. Make it easy. Right here. Let's make it a goal for you to, it doesn't matter if you have a passive income stream or not, especially if you don't have a passive income stream. Let's make a goal this year to have at least one, by the end of the year, you have one extra stream of income coming in. That doesn't involve your time. The best thing to do, the best way to do it, in my opinion, and I've done it for years, is invest in something called a real estate syndication. Just a group investment. You don't have to do anything but put your money in. You can go to debtfreedoctor.com, my website. We have plenty of investments there. Go to the top right. On the top right, it'll say invest now. If you don't want to invest with us, that's fine. But pick somebody that's trustworthy, pick somebody that has a good track record, and start with them. Put the money in, and then you get your first stream of income. Then I want you to focus on really increasing your savings rate. Most people don't. Most people just like, well, whatever's left over, that's what I'm going to save. Really want you to focus this year on cutting any unnecessary expenses to increase that savings rate. So let's write this out real quick. I'm going to give you three things that I want you to do for this year. All right, here's your 3 steps I want you to take for this year. Number 1, I want you to commit to investing in at least one passive income stream. Again, real estate syndication, real estate project, business, that's the easiest thing to do. Dividend paying stock, but something that is going to put money in your pocket without involving your time. Number 2, I want you to focus on decreasing your expenses. Go through your credit card statement. What can you cut? And whatever you cut, make sure that you use that to increase your savings rate, because you're going to need to automate it into some sort of checking account. That's going to be your passive income account. And then once this gets enough, then you can invest in one of your, something that's going to increase your passive income stream. Okay. Typically the minimum investment for real estate syndications, $50,000. Number 1, passive income stream. Number 2, cutting expenses. And number 3, if you don't have a CPA that will do this for you, I recommend that you hire a tax strategy professional. Again, the CPA group that we work with, they will do that for you. I'll put the link below the video. If you don't want to use them, that's fine. Ask your accountant if they could do this for you. And that would be easy. And then tell them every single year, at minimum once a year, again, the end of the year is the best time to do it. at least once a year, you can focus on doing this. So now you have it. Now you know what to do to build wealth this year. I gave you 3 actionable steps. Again, make it a point, get started first of the year. Actually, get started today. All right. Now, I've talked a lot about real estate syndications. If you don't know anything about that, that is my go-to, because you can focus on your main income while you put money in something that's just going to keep earning you more income. If you want to learn more about it, check out this video.